Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Monday the 16th of December. Well, we have had a significant improvement in risk appetite and quite a choppy reaction actually to this announcement that the US and China effectively reached their phase one agreement with regards to a trade deal. And that really did move markets actually. We saw the original announcement which sharply strengthened the Chinese yuan, which pulled dollar yuan back well below 7.00. Then a rebound actually, because markets were sort of unsure as to exactly the finer points of the agreement that has been reached and as to whether it actually is all that it's cracked up to be. And it seems as though that the market is still trading around that 700 level, which is basically seen as a bit of a watershed for the outlook on this trade dispute. So still in the balance pretty much there, but you can see that risk appetite has sharply improved. It's got volatility on the VIX, which has fallen sharply in the last few days. We've also seen the dollar, which came under pressure, a bit of a rebound, sort of a retracement move to the initial move back, but certainly seems to be sort of dropping away. That's in the process of breaking that big uptrend channel that we've got on dollar trade weighted. You've seen treasury yields, which again spiked higher, but then retraced some of that move on Friday, but again now starting to track higher again on both the 10-year and the 2-year. So really interesting moves that we've got there on major markets. Equities strong. Look at that, FTSE 100 still climbing higher. There is a big added incentive for UK equities, given the fact that the UK political cloud and uncertainty has been reduced by that significantly better than expected result for the Conservative Party, which basically puts the UK on track to finally get the Brexit situation rolling as the withdrawal agreement can now be pushed through Parliament. So really important move there we're seeing on FTSE. Sterling less strong than it was earlier today, but still certainly gaining ground as one of the more outperforming of the major currencies. But look at that move on FTSE 100. Equities broadly are positive. We've got the S&P futures up. We've got European equities broadly higher. We had some pretty decent trade data. Pretty decent industrial production and retail sales data out of China overnight, which certainly helped to drive that improvement in risk appetite. Industrial production jumped to 6.2%, retail sales jumping to 8% in China, so both of that helped risk appetite. We've also had actually this morning the manufacturing and services PMIs on the Eurozone flash PMIs, sort of mixed really, little shade lower on the Eurozone market composite PMI, back to 50.6. Now, the UK data, not great at all. Is expected to see an improvement across the board, but we've seen a deterioration across the board, and that's actually dragged the composite PMI back to 48.5. So really disappointing there from the UK economy. It certainly seems as though December is going to be another month where the UK is in contraction and not great for Q4 growth generally. Now, US PMIs this afternoon, if I can find them, are expected to be basically where they were, a little bit basically in line with last month on the manufacturing. Services a little shade higher, so we're expected to see that this afternoon, 245. So that leads me on to my chart of the day, which is euro yen, and what we have seen is the euro gaining ground, and that improvement in risk appetite driven through that US-China trade agreement has hit the yen, and that is translated through euro yen with a breakout above 121.40. I've sort of said on the morning report you've got this pivot band 20.75 to 21.40, and you're breaking through that in the last couple of sessions. This shooting star candle was a little bit of a concern on Friday, but the bulls have come back in and with a renewed vigour this morning, to pushing euro higher against the yen. Look at that, 66 on the RSI, strong momentum. MACD line, strong momentum. Still a bit uncertain on the stochastics, but I would say that any unwinding move back into 2075 to 2140 is a chance to buy. You had that reaction low that's held on pretty much again this morning, 2155. And you can see here on the hourly chart that 2130 to 2140 area supportive on the retreat on Friday, and started to build again. So weakness, I think, would be an opportunity to buy on euro yen. Certainly looking positive and building nicely. So anything into this support band now, which is an old pivot band, which is now supportive, really, I think opens the way for further recovery in euro yen. 23.35 obviously is that July high. That is the next key resistance, and I think we could see that tested in the coming weeks. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.